Morning, everyone. It's Louisa. It is Wednesday, March the 4th, and we've had non-farm payroll ADP released this morning. Just taking a look at the numbers. Wednesday, March 4th, ADP non-farm employment change. So we were forecasted for 50,000. So remember that this number excludes anyone working in the farming industry. And employment or change in employment numbers has increased, is larger than forecasted. It was forecasted for 50,000. It's actually 63,000. So that's good for the economy, shows growth. And also the ADP is another organization that puts together this data that is exclusive to the government. So the government's number comes out on Friday at 8:30, but this is just, I guess they use another company just to provide, additional source of information and confirmation that their numbers are going to be pretty similar. So anyway, so that was out this morning. So that's positive for people, positive for the economy. And I'm just going to wait for people to come in at 9. I know I started a little bit early this morning, but I just felt like starting a bit early. Beautiful day here in Canada. The sun is shining. Temperatures are pretty nice today. Still wearing 2 jackets, but for us, it's beautiful. It's a beautiful day. I'm just going to go through a quick top-down analysis this morning. I just like to refresh myself in terms of where price is, where the market is. Again, I'm going to wait just a few minutes for others to join us, but this is the weekly. This is a key area here on the weekly. This is the BISI. That's candle 1, candle 2, candle 3. And this is an area that price has repriced to numerous times. Hey, good morning. Good morning. I'm talking to myself right now. I'm going to do a quick top-down analysis this morning. And I'm just going to wait a few minutes for others to join us because I started the live stream just a few minutes early. What's going on here? Yeah, I just want to give everyone just a few minutes. Hey, Polter Snack, how are you today? I'm going to do a quick top-down analysis. I'm just going to give everyone a few minutes. Hi, Easy Tradez. I'm going to do a top-down analysis. I just want to give everyone a few minutes to get logged in, and then we're just going to go through top to bottom some of the key levels that I've been trading off this week. I don't do a lot of trading on, hey, good morning, German or Sanchez, Serim 22, good morning. I don't trade a lot on non-farm payroll week. It's a week that sets up the remainder of the month. And so anything that I trade, I'm just going very easy on. I'm also looking, I don't really look for super long trades this week, although I've had 2 great trades so far. But this is a week where I just go really easy. Non-farm payroll week is traditionally just not a great week for trading. It's pretty volatile, and this week is setting us up for next week. So I just like to make sure that I have my key levels on the higher time frame and kind of have just things set up nicely for next week to capitalize on next week. So I will be on the charts today, and then let's just take a look at the calendar here. So as I mentioned earlier this morning, a few minutes ago, Wednesday, March 4th, we have ADP non-farm employment change. We can see that we were forecasted for 50,000 and numbers came in at 63,000. So what does this actually mean? This means this number here is any employment changes excluding any farming. So anyone who works in the farming industry is excluded from this particular number. And ADP is a firm that the government uses in addition to the number that they're going to release on Thursdays. That was a Friday. So down here, non-farm employment change. So they use this company, I think, just to corroborate, verify that the way that they're surveying or collecting the data is in sync with each other. So this gives us a flavor of what to expect on Friday. Now, Friday is a day that is an absolute no trade day for me. So I'll be here today, I'll be here tomorrow, but just know that Friday, I'm starting my weekend early. That is not a day for me to trade ever. Okay, so numbers have come in at 63,000. So that's good for the economy. That means, the economy is healthy, it's employing people. And now bear in mind that this is a month over month. It's not a year over year. So, we just take that data where it comes from kind of thing. Okay, so it's 9:02 and I want to drop down. I want to do a top-down analysis and I'm going to start on the weekly. I'm going to remove everything that we don't need to be looking at here. So let's just take off the SMT. And what else here? Let's just take these guys off. I just want to look at a nice clean chart. Okay. All right, so this is the weekly, and what I like to do pretty much on the weekends, but then I update every night after the trading day has completed, is I update anything on the higher time frame that needs to be updated. So what I do here on the weekly is I'm just taking a look at the key levels that stand out to me. Hey, good morning, Dal Malifemore. And so what I'm looking at is I'm looking at where does price touch multiple times? And so let's just start with the first one up here, the weekly. This is swing high up here. So I just threw a line up here. The next one that stands out to me is this area and how many times have we touched here? So uh, once, twice, so 1, 2, 3, 4, 5, 6 times we've touched here. So I'm just dropping a line in here. This does not need to be a difficult task. This is just your eyes get used to seeing the levels that IPTA has repriced to multiple times. The next one, the third one down here, you can see we've touched this once, twice, 3, 4, 5, 6, 7, 8, 9, 10, 11 times. We have touched this 11 times. So this is a key level. So I put that on my chart. Next one is this one down here. So this is 24,754. So we have touched this once, twice, 3, 4, 5, 6 times. Again, this is on the weekly. And then what I've done here is I like to put in any sibis or bisis or any breaker blocks that I happen to notice. Those are the key levels of liquidity that I like to put on my chart. Now this one here, we have a bisi here. This is candle 1, 2, and 3. And so I've dropped a bisi on here and you can see that price dropped right into here yesterday morning, which is why I took a trade on a day that I would not normally trade. This is what I'm looking for. I'm looking for on the higher level price to drop into here. And we can see that price has dropped into here many times. So this is a key level that should be on your chart. And then just below here, I have my last one, which is the swing low. And we can see that the week of February 2nd, price came down. And then the week of November 17th, price came down and just kissed this level before immediately expanding upwards. So this is these are the key levels on the weekly for me. Then I go down to the daily. And let's just take a look at the daily. The daily, my daily levels are in orange. And so let's just see. Now the daily, I'm looking for the same thing. Where are the levels that price has touched more than once? And so this is my first level here, and this cluster here has been playing with this area multiple times. So once, twice, three, four, five times. So that is a level I'm going to put on my chart. Next, I'm going to go down to this level here. This is a really important level, and I want to just draw your attention to, look how many times, I'm going to do this in a different color. Now we are playing in this area here, and I'm going to draw this to your attention because this is high resistance liquidity in here, and we'll take a look at this in the lower time frame in just a few minutes here. But this is a key level that price IPTA has been repricing off of, both to the upside and to the downside, and we are still in this range. So we are trading in a range on the higher time frame right now. So that is something to keep in mind. It's a little bit tricky, so patience is required. Okay, after that, I just put in a couple of sell sides, and that's basically, I'm just looking at wicks that extend lower, swing lows and swing highs, and I'm just dropping these on my chart on the daily. Okay, now even though I have these higher levels on my chart, really the only area that I'm concerned about is here. I'm not really concerned about what's going on up here. This is completely irrelevant. I am focused on this area here. So let's drop down now. Let's drop down to the 4-hour. And this is where we start to get more into the what is relevant right now. So again, we have our weekly down here, this green BISI here, and this is a very important area because look how many times we've tapped into it, but this weekly is holding at this point, okay? So on the higher time frame, this weekly SIBI is holding. If price breaks below here, then I will be looking for lower prices. If this area continues to hold, then I am looking for opportunities between this kind of nutsy area up here in yellow and this area here. So if we lose this, I'm looking for lower prices, and we do have those on the chart in terms of sell side. So this is the 4-hour. We can see in here, here's our yellow area that defines that choppiness. We can just see how liquidity is it's difficult liquidity to trade, right? Especially through here. Anytime price comes up into this area, which we have this morning, this is high resistance liquidity. And so this is why I'm keeping my trades just a little shorter. I'm not looking for huge runs because we're in this, price is working through redelivering in this area. Next, now on the 4-hour, you can put in, if you want, you can put in your sibis and bisis. I don't, because I like to put that on, I like to use the hourly to add my sibis and bisis because it's easier for me to trade off of the hours. If you put your 4 hours in, you might have to use, you might have to break down your 4 hours into fractal components to be able to trade, a 4-hour BISI or SIBI could be like 200 or 300 points, right? That's like a pretty large level. So for that reason, I just go to the hourly, and this is all I do. So weekly, daily, hourly. I take a quick look over the 4-hour, but that's about it. Hey, good morning, Donald. Okay, so now we're down into the hourly, and this is where I want to really understand where price is going. Again, here's our yellow area that we had defined on the higher time frame as having high resistance liquidity, and we can see very clearly in here that on the lower time frame, it's quite choppy, and it's high resistance liquidity. Now, once I'm down in the hourly, what I like to do is I take note of where my higher time frame areas are of support and resistance. I'm just going to call it that. You can call it whatever you want. And then again, we have our weekly BISI here that is holding price up. From here, I am looking for swing highs and swing lows, and I am looking for sibis, bisis, and any breaker blocks. Let me make sure my chart's big enough for you guys to see. So I'm going to just take this off here for a second. What I like to do is, guys, when you click on anything on your chart and this little box comes up, if you go to visibility, you can click on that and you can remove, not remove, but hide anything that you don't want to see in that time frame. So I'm on the 1 hour time frame. I don't want to see this yellow box. So I'm going to uncheck it from here. I'm going to take it off my hours and I'm going to take it off the minutes. I don't need to see it. I already know it's high resistance liquidity, but I'm going to keep it on my days and my weeks. Now my chart is clean. And if I go back to the days, I'll be able to see it there. So I'm just hiding it. I just hide things that I don't need to see that are not relevant to me looking for a setup for the day. Okay. So this is how I keep my charts clean, but all the information is still there. Okay. So I'm looking for sibis. So the last time price dipped down into this weekly was Tuesday, March 3rd. So that was yesterday. Price came up, it moved back down. Where did it move? Right into this hourly BISI. Price came in, tapped in, and then moved up. Where did it move up to? Into this hourly on the sell side of the market maker model. So here is the sell side of the market maker model. We can see we have our hourly SIBI up here and price has come right into here. This is how I follow price, and it's very easy to follow price when you have a very organized chart. So hypothetically, what would I be looking for next? Well, on the higher time frame, I am bearish, but I know that on the weekly, this weekly BISI is holding price up. So I'm looking just a little bit above. And what are the possibilities where price could go? Well, price could go to this area here. We have liquidity up here. Just going to put this maybe in a different color. Make this a little bit bigger. So we have liquidity above here. We have these sibis that have not yet been touched. So we have sibis up here. We have another sibi here. Now on the 4 hour, of course, they all look, this would be joined. So these are two areas here of liquidity. Of course, we have above these highs. Oh, and look, this coincides with our weekly level of importance, right? And on top of that, of course, we have our daily and session highs and lows, which we don't have on the chart right this second because I've hid them. So let's open those up now. So let's open up, let's see here, this one here. These are the indicators that I purchased for 20 bucks a month, and you can see just how fabulous they are on my chart because I know exactly where I am every moment of every day. So here's our midnight open. We are above midnight open. Here is our previous week high, our yearly open. So price is below yearly open. And then I have previous day low down here. So this is important, previous day low. Previous month low I have down here, and oh look, another dark blue line. I know that that is a weekly level of support, and I have my sell side here. So that's where we are on the hourly. This is the only thing that I am concerned about. This was a beautiful smart money reversal. Why? We have an inverted fair value gap here, then we had a fair value gap here, change in the state of delivery, and price came up, repriced into this hourly and moved up. So it's very clear to me that price is moving very nicely from level to level. Now, one thing I'm going to add to my chart on a daily basis that for a while I haven't been doing, but someone brought it up in the chat. I think it was last week and just reminded me that it's nice to have on here is I'm going to make this a little bit bigger. This is really, it is a really important area, and I'll show you why. I'm going to make this a little bit bigger. This is the settlement price. Let me make this a different color. This is the settlement price of the previous day. So let's make that this color. This is settlement price from the previous day. Now, this is a very specific price. It's settlement from 4:14 p.m. It is the last candle that prints. Now, to find this level here, you have to go down to your chart and you have to switch to the daily, your daily. And yeah, I don't know if you can see, yeah, down here. So you can see that this is electronic trading hours. See, I'm on electronic trading hours, which allows me to see everything overnight. Well, if you go down and switch it to regular trading hours, you can see now that you don't see any trading from overnight. So we go down to the 1 minute of the daily trading hours. And I'm looking for the last candle that prints, this one right here. This was the last candle that prints. And if we put your cursor, you can see it's 6:14. This is the last candle that prints. And then all you do is you draw a line at the closing price. So open, low, high, close, right here. This is our 4:14 settlement price. And I want to make sure that that's on my minutes and I don't need to see it on any other time frame. For now, I'll throw it onto hours, but you get the general picture. I don't need to see this on my daily or my weekly. Okay, so now that we've got that on our chart, so that is the closing candle, the closing price the night before. Now we go back to electronic trading hours. And let's just go to the 5 minute here just for ease. So what are we going to do with that level? Let's just find that level. Where did I put it? Go, I'm just going to move it over so I can see it. And make sure I can see it on the lower time frames. Yes, so let's just go down to the 5 minute now. So what are we going to do with this? So this is very ICT-ish. So here it is right here, this line here, okay? So this is settlement 4/14 Tuesday. Now, what do we do with this? So ICT, you can use it as a confluence. You can use it to help you with order flow. It kind of just gives you an area that you know that price closed yesterday at 4:14 right here. Now trading has happened overnight, so we have this overnight and price is currently up here at 24,896. So all I do is I drop, you can drop a GAN box if you want. Now the GAN box is over here. Where is it? Right up here. Here it is, GAN box. GAN box is very helpful. So if you just put a little, if you click on the star, it'll come up in your toolbox. So I like to use the GAN box. I use it all the time. So all I'm going to do is I'm going to drop a GAN box on the closing price of the 4/14 candle to the 9:30 opening price. Now we don't know what the 9:30 opening price is yet because price hasn't opened. And what I've done on my GAN box is I've just created a 50% level, so we can see the 50% level, and you can change colors to anything you want. And it's just a visual instead of drawing a fib. Sometimes I use my GAN box. So what I want to do is I want to have the opening price of 9:30 So now I'm just going to throw this on my chart, but I'm going to adjust it because price opens in 10 minutes. So if price is up here at 9:30, I'll pull my GAN box up. So as per ICT's strategy or thoughts on doing this, is ICT tells us that this is called it's opening range gap. And that is very specifically from 4:14 candle close yesterday to this morning's 9:30 open. And ICT, as per ICT, he tells us that there is I'm going to write this down, 70% probability 70% probability that price will go to 50% of the opening range gap between 9:30 to 10 a.m. So this is only between 9:30 to 10 a.m. So how do I use this? Well, I use this and I used to use it a lot and I just got out of the swing of using it, but whoever reminded me of it last week, I thank you because I think this is good. Let's say you're not exactly sure which way price is going to go when price opens in the morning. So let's say opening price is right here, and we have our candle close from yesterday. Well, if there's a 70% chance the price is going to come to 50% of this GAN box between 9:30 and 10 a.m., then that's a pretty good statistic by ICT. Then instead of price flying up, I mean, price could expand upwards, but we know that this area here, that price will come to this area here is a fairly high probability because it's 70%. So some traders use this as a strategy, a standalone strategy, and they just trade the opening range gap. That's very popular. You can also just use this as I guess, just to give you an idea that price will probably or is likely to come to the 50% mark. Um, and if it just helps you with order flow, that's good too. So I'm going to leave this on my chart. I'm going to have this on my chart every morning going forward, and then we'll just take a look at this together. And I don't give trading advice. This channel is for entertainment purposes only. I'm not licensed to teach anyone how to trade, and that's not what this channel is about. But I'm just sharing my ICT knowledge. So we'll just leave this on the chart, and I'll move it when opening price happens, and then we'll take a look and see, uh, and look where the 50% coincides. Right inside this SIBI as well. So I'm just observing this, BISI, I mean. So that's interesting. So price may come here and then move up. We don't know where price is going to go yet. But anyway, nice to have on the chart. So, okay, so that is my higher time frame prep, all the way from the weekly, the daily, the 4 hour, the 1 hour, down to what I'm actually trading on the 5 minutes when price opens. And I have my previous day high, my previous day low. I've got my midnight down here. I've got my Asia low. So here's Asia. Here's my Asia low. Asia trended last night, so it went from A to B. You can see that London just started in the middle of Asia, and then we moved up. We swept Asia high. We swept the daily high. We're in this 1 hour SIBI up here, so I'll be interested to see whether this SIBI holds or not. If price wants to go higher, first it'll have to come lower. It'll have to manipulate lower. We do have this hourly BISI here, and then this is our weekly strong level here. Above, you can see an orange line, so we know that that's a daily key level. And then we have these sorry, what happened there? We have this hourly SIBI up here. So all the way from the higher time frame down to the lower time frame, I know exactly where I am. And then I'm just looking to trade level to level. And that's it. That's my higher time frame. That's where I'm at. So there we go. If you have any questions, please drop them into the comments. And after this video is posted, if you have any questions, just let me know. And let me know if you have any questions about this opening range gap, how to find it. And I'll just take this off now. Okay. So yeah, so that's it. Now we've had, because we had news at 8:15, we're coming up to 9:30. I'm going to be watching the markets reaction. I'm going to be looking at these key levels, and I'm going to wait for price to enter one of these key levels before I look for a smart money reversal or continuation. When price opens, I'm always looking for a manipulation. I'm looking for the market to manipulate or induce traders into thinking that there's a long or short move for the day, but that is inducement. That is what manipulation is. And then wait for that manipulation to happen before considering jumping into anything. So, okay. So it's 9:25. The other thing I'd just like to ask guys, if there's anything in my videos that you'd like me to address, please just put your comments in and let me know if I should go slower, if I should speed up, if my videos are too long, too short. Maybe I'm explaining enough, maybe I'm not explaining enough, but I would appreciate your feedback because it's with your feedback that I can, be able to dial in a little bit better in the delivery of these videos to you guys. Hey, Lavira. Veer, you always make me smile. I know your name's not Lavir, but I keep calling you Lavir. Okay, so I'm gonna go now to my trading. Uh, this is my 1 hour. I like to have my 1 hour up here, and then I can just keeps me grounded in terms of where we are. So this is where we are. Here's our settlement price. Here's our And again, I'm going to adjust this BISI or this GAN box just wherever price opens at 9:30. One thing I'm going to add to this that ICT says as kind of like a pro tip, if the distance between the settlement price at 414 and the market open at 9:30 is really, really large, like let's say it's 200 points, then we could anticipate that opening price may only come to the first 25% of the complete distance. And that's if the opening range gap is really, really large. Okay. Good morning, Just USA. So, good morning, Frank. Good to see you. So just bear that in mind. And so for the next foreseeable future, I'm going to drop this on my chart and you guys will all know what it means. So this is again on the hourly, this is where we are. This higher time frame weekly right here is supporting price. Price dropped beautifully into this this BISI before moving up. Where has it gone? Right into this higher time frame hourly SIBI. We have this um, we have this important area up here. Again, that 25,000 mark, you can see how many times we've hit it, and we have liquidity up here on the hourly, and then right above us, again, another weekly important level. So with that, let's go to the 5 minute, and I'm going to put everything back on my chart. So let's see, I want to I'm going to just adjust this. So I'm just going to move this down. Price is obviously moving around, but you get the picture here. I got my SMTs, so that's cool. And I also want to be watching YM, and I want to be watching ES. 9:30 open. Where's our opening price? Right there. So I'm going to bring the, okay. So initially, obviously, the non-farm payroll is positive for people. Not that that's a huge indication of where price is going, but it's certainly, indication this month of a stronger economy. Good morning, XMT. Red folder news at 10. Let's just take a look together here. PMI. So I'll just drop that on my chart. At 10. Okay, so there we go. New York, M in your indicator is until what time? What does the M stand for? New York. Just tell me what M stands for. Okay, so I'm just going to talk out loud here, guys. We're on the 5 minutes. The hourly sibis is being tested, so price has pushed through it, but only the wick. Here is London High. We've taken London High. And so has ES and YM. Below us, oh, manipulation. Okay, sorry. New York manipulation in your indicator as until what time? Okay, that's a good question. For me, time is the most important aspect of trading. So I'm looking for manipulation inside a macro, or I'm looking for continuation. The macro is XX 45 to XX, XX 45 to XX 15. Inside this macro, I'm looking for manipulation or continuation. Sometimes manipulation is super, super clear, and sometimes it's not so clear. If manipulation happens before the macro, like a few minutes before the macro, then I'm looking for expansion or distribution inside the macro. So manipulation could happen right at 9:30, but I'm still going to wait for the macro to start, and I'm anticipating distribution to begin inside the macro. A pro tip is it's okay for me to enter a trade 3 minutes early if clear manipulation happens before the macro. So in other words, the macro starts at 9:45. I could enter the trade at 9:42, expecting distribution to be quite quick. Meaning that if you're not in the trade before the macro starts, there's a possibility that you might not get the opportunity. Now, this is not trading advice. I am just sharing my information and my knowledge of ICT and the 3 months that I spent with Zusi in his mentorship. So for me, time is everything. Now, I also want to point out that we have news this morning. I generally don't trade pre-news. I want the market to have whatever reaction it's going to have. And if that means waiting for the next macro, which would be 10:45 to 11:15, then so be it. I'm a day trader. I'm looking for a nice day trade. I'm not a scalper, so those rules don't apply to me. So I just want to be clear about that. So again, here's our 50% of our opening range gap. And let's just take a look. It's 9:35. We've had price push up. We are above previous day high. So we've taken previous day high. Just going to move down to the 2-minute. This is a Venom model by ICT. A Venom model is strong candle up, strong candle down, closing below the strong candle up. We don't have a closure yet, but this is the Venom model. So it looks like two fangs of a snake. I've traded a lot of ICT models, so I'm familiar with like many of them to the best of my knowledge. And but I have my model now, and I just trade my model. I've stopped trading everything that I see on a chart. But this is a Venom model. Then we have this opening range gap. So there's many things with ICT that a trader could consider trading. But once I narrowed down to one specific model, everything changed for me. So I'm not trying to trade everything that I see on a chart. I trade a smart money reversal using power of 3, accumulation, manipulation, and distribution off the 1 hour key levels. So price has pushed above this this hourly SIBI. We've come back into the range, but it's obviously showing strength. Let's see if price comes to close at least 50% of this opening range gap. And like I say, this Venom model right here. So this is price pushes up and then pushes right back down. This is Venom. This is Venom model. I think just for fun, I'm just going to take like, I don't want anyone to copy me, but I see this Venom model, but it's not the macro yet, but I'm just going to quickly do this. Don't copy my trades. This is not a service for copying. It might. It might. The reason is, okay, so I see the Venom model. I'm trying not to see that. I also have an SMT here, okay, between ES and YM. I've got my opening range gap here. This would be 50%. And then I'm looking down here as a possible target, AM1 as my terminus. Now we've had news this morning and it's freaky week. So I just took a very small position. Yeah, change in the state of delivery. I'm on the 2 minute. There's no need for me to be on the 1 minute. Sometimes the 1 minute is just so fast and there's so much information that you know, you could get a little bit of analysis paralysis, right? But I'm just looking at the key things. This hourly SIBI holding, opening range gap down to the 50%, knowing that this is a Venom model by ICT. So again, don't copy my trade. That's not what this is about. This is for entertainment purposes only. And this will be just a quick. $9.42 is early macro if one believes that this is the manipulation here. Just noting on the 4-hour candles that the 6 a.m. candle is a doji, right? So it's very indecisive. That 6 a.m. 4-hour candle, very indecisive. Again, not unexpected on a news day, right? YM and ES moving, expanding downwards, NQ being late adopter. Macro has started. Okay, good to know, German. I didn't track the first presented yet, but thank you. There is a higher time frame SMT supporting a higher move up, but we'll just have to see how this transpires. Again, it's a news morning, so we don't know. I mean, if price is going to move up, I don't know. Okay, that's good to know. If price is bullish today, do possibly with that kind of news, I'd like to see it come down. I'd like to see price come down and sweep even the AM low. I mean, I don't know that it would get down to Asia low, but it'd be fabulous if it did. But if price is feeling very bullish, so um, you know, love to see it come down to Asia low, but that seems like a bit of a stretch. it's really working its way through this hourly SIBI, isn't it? Repricing lower, then coming back up into it, coming back up into it, repricing lower. It's really working its way through this hourly SIBI here. That makes sense, German. It's feeling bullish. Yeah, I don't want to see it go above this. See it go above this BISI. Yeah, it's closed above this BISI, so it's not looking good. Hi, T-Shep. I think that'll help. That 10 o'clock candle is going to open and we're going to see a jump either way, right? Yeah, that 10 o'clock candle. So I'm out. That's unfortunate. I'm just going to take this out. That's the 10 a.m. news, the 10 a.m. candle. We are well above midnight, so I'm going to watch price and see if we reach an area. That 10 a.m. candle is just open and then shoots higher, so that's a very bullish. That's a very bullish move. So obviously the 70% probability didn't work this morning with with our opening range gap, which is fine. You know, I just had a small position size on. We have SMTs on both sides. This hourly SIBI is supporting price. Here's the breaker, low, high, lower, low, higher, high, off of disbissing. If this is manipulation, it wasn't much of a manipulation. Accumulation, manipulation, distribution. I mean, it was a very small, almost insignificant manipulation. Again, we have news this morning, so it's just if we're going to have manipulation, I like to see manipulation like take something out take something out that's a little more substantial. So I'm just going to continue to wait and be patient here. YM and ES are lagging. For a macro, price has not moved significantly. Here we are at a key level on the daily. So this is our 25,000. That's our key level here. So I'm going to wait and be patient and see what happens in the next macro, what the response will be by price at this key daily level here. So you can see this is the level that price has bumped up against numerous times here. See if we can get above here, and if it wants to reach for liquidity above, or if it's just going to bounce around a bit until the next macro. Yeah, 25,000 has been, that's a key level. Yeah, exactly. So I want to be patient. We're well above midnight, so that's my key. That's my key kind of equilibrium there. I like to sell above midnight and buy below midnight. So let's just wait and see. ES and YM. ES has taken London high, previous day high, and YM it's just past, just moved above London high, headed towards previous day high. Because it's 10 o'clock, I'm going to take off this GAN box, but I'm going to leave on the settlement price. The settlement price is less important to me as the day goes on. It's just kind of that between 9:30 and 10 a.m., that opening range gap. And I'll keep it on until I put the new one on today at a market close. And the first macro is just coming to a close, 10:14. So let's see what happens in the next hour if we get some price distortion. See what price wants to do with this key level. Well, that's good, Donald. Isn't Silver Bullet at 10 a.m.? I don't know if that's changed, but Donald, you said you took the Silver Bullet at 9:48 on the 1 minute. I think Silver Bullet, correct me if I'm wrong, guys, isn't Silver Bullet at 10 a.m.? Silver Bullet? We have a new week opening gap just above this daily level of 25,000. Oh, good. If it works, it's good, right? So we've got this new week opening gap from February the 22nd. and pushing up into the new week opening gap and a new day opening gap, March the 2nd. Equal highs at 25,099, but this is very this liquidity here in these two hourly sibis is definitely a draw. Yay, just USA. So we filled that new week opening gap, new day opening gap. So I'm going to turn that off now. Do you guys get cold when you're trading? Dare I ask that of anyone living in Miami or Florida? I don't know why. I always get cold when I'm trading. I don't know if it's like adrenaline or what, but Do you think? Stating the obvious, Donald. You're stating the obvious. It's warmer today. It's like, I don't know, worst case scenario, it's like -8, -10. Like it's nice. I was out for a long walk this morning. You guys know I'm always walking early before trading starts. Yeah, okay, good to hear you have cold hands because like I'm freezing. I always feel cold after I trade, and I do think it has something to do with like the chemicals. It could be adrenaline. I don't know. I mean, I try to tap into what I'm feeling during a trade. Like I want to have almost no emotions when I'm trading. And so long as I'm trading at a, so long as my size is low enough, especially on a day like today, I should really feel nothing. But the sun is shining, so it's beautiful. I mean, I still wore two jackets this morning, so I say it's beautiful, but I want to get down to one jacket. Okay, peripheral vasoconstriction. Sounds reasonable. Should we just call that PV? I'm already in my mind, I'm already writing in my journal. Like I'm just looking to see I always, if I miss that manipulation, I'm always asking myself, like, how did I miss it? Or what was distracting me, from seeing where that manipulation was. Okay, well, that's good. Andre, that's good. So I entered a paper trade at 24,674. So let's see where that is. 24,674. Right here. Let's just throw that on the chart and we'll see what you were looking at. 24,674. Right there. 24,674. Still holding. So 24,674. So you entered. So Andre, just curious, what time did you enter? Like basically you entered at the high of the first 90 minutes of London. So I'm just curious what your rationale was for entering the trade. Yes. It was above this BISI. Asia had come down, started moving up, but this was London, the high of the first 90 minutes. Anyway, depends what your entry model is and what your rationale is. But look at this go. Holy cow. So this right here was the manipulation. So I'm going to be putting that in my journal and I'm just right there, manipulation. So just reviewing this, I'm just going to take this off, and Andre, thank you for sharing that with us. So we're just looking here. So this morning, 7:56. So price moved up into this hourly, and then it chop, 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 chop. We had price release at was it 8:15 or 8:30, and then we had the 10 a.m. release. So price came down. Here's 9:30. So 9:44, just before the first macro started, price came down and took out these lows. So this is one for my journal that, although I anticipated a better manipulation, like a lower manipulation, obviously price doesn't have to manipulate lower if it's very, very bullish. So this is one for my journal. So for me to learn from this for next time, that not to project my interpretation onto the chart, but just to be a bystander and just witness what's happening. But this is important too. And then just looking on YM at 9:44. So YM manipulated below month open and NQ did not. So that's really important as well. There's the SMT to the downside. So anyway, this is an important notation in my journal. This is a learning moment for me, not to project what I think I want to see on the chart versus what I actually see on the chart. And I think it's also just another reminder for me. I like to wait until after that 10 a.m. news. Prod hand 97. There is nothing here that would indicate to me that price is going to move down at this moment in time. We have a very strong bullish push up into this hourly SIBI. We are above the 25,000, which is a key level. And so I personally would not anticipate at this time of day any type of major reversal. What I would be open to seeing is price continue maybe to tap into this higher SIBI as well. But when price is showing considerable bullishness, I'm not looking for a smart money reversal anytime soon. A smart money reversal needs to, excuse me, I need to see some structure being built, and it's not going to be, it's likely, in my opinion, in my humble opinion, not going to be at 10:34 in the morning. We could see a potential pullback, but a pullback is different from a reversal. A reversal is smart money having a change in the state of delivery from bullishness to bearishness. And, you'd want to see some structure built around that. So for now, it's fulfilling orders up here in this hourly BISI. We have NQ and ES maybe just pulling back. Where would it pull back to? Well, maybe this order block, right here. Pull back to here, maybe, but that's a big pullback. We are well above midnight. So I'd love to see eventually, it doesn't have to be today, a smart money reversal. Doesn't have to be today. So that's good. Thank you. Just USA. That's a good analysis. My bias was bullish since yesterday. Took out February low, but NQ didn't. Okay, that's a good analysis. Thank you for sharing. The other thing to consider is when you get a really strong push up like this, change in the state of delivery is like way down here. That's a big, like I say, for a smart money reversal, you really want to see some structural change. But definitely it could be a pullback. A pullback wouldn't be unreasonable. Severe, if your problem is holding, scale down. I used to have such a problem holding my trades. Uh, I would never allow my trade to reach terminus. I would always like it's fear of losing what profit you have. That's a psychological uh, barrier. And so I had to completely scale back in size until I feel no emotion. And then I'm able to, without emotion, I'm able to just read price and allow price to go to my terminus. But terminating trades early it's a size issue. It's fear of losing what you already have in profit. And like I say, the way that I tackled that was to scale way back in size. And then I'm just trying to, this year, I'm just working on psychology and uh, I'm slowly, I'm just trying to think of the word here. I'm going to slowly build up in position size, and it's going to be slow so that I continue to not feel any emotion during my trades. That's my goal, is to desensitize. That's the word that I'm looking for. I just have to incrementally desensitize to the to position size. And so you have to reverse engineer that process. You're going to need to reverse engineer it. And that is to trade with a size that's like so small that you feel no emotion, that you lose the fear of missing out, fear of losing profit. Yeah, that's another fear of becoming greedy, trying to make things back. Yeah, you got to let go of that. That's again, that's another psych problem, right? Fear that you just had a loss and wanting to make that back really, really quickly is going to interfere with your ability to look at the market with a clear vision. And so it's best if you have some very clear rules in your trading plan that might help you. Like for instance, um, I have a very clear 2 trades per day, and that's it. And if I am misreading the market on those 2 trades, then I need to come back on another day. Like I'm obviously not reading things, or it's a choppy day and I haven't recognized that. But I have a clear parachute after 2 trades. That's it. I'm not sure that, I'll just go out here on a limb, I don't know, but I'm not sure that women, females, feel as strongly about revenge trading as men do. I think that's a more of a characteristic of men than it is of women. The second macro is about to start in a few minutes, and we could see a push higher. We have a little pullback here. Male ego. When I was doing my MBA, we were looking at it just in one of the courses that I took. We were looking at the difference between female CEOs of really large companies versus male CEOs. And some of the research in that area is really, really interesting, the difference between male CEOs and female CEOs. And one of the key takeaways that I took from those studies is that male CEOs have a higher risk tolerance. So they're willing to take higher risks. And that works really, really well with like venture capitalist, new companies, new fresh IT companies where they're really willing to take the risks. And women were considered exceptional leaders because they led with a more aligned approach, less risk taking as compared or contrasted with men. So it was very interesting. So I think the end result was it depends upon the type of company, um, whether there's clear advantage to a male CEO versus a female CEO. So for a company perhaps that's more established and wanting to see growth year over year, that female CEO might be a good fit versus a new company that needs to have some risk. Uh, and so you might transfer those findings to traders, and I don't know, and that might just align with men when they take a loss, that feeling of wanting to get back in the market and make that back might be that higher risk tolerance, and it's something just to be aware of. I'm not a psychologist, I'm just sharing some information that just comes back to me when I was studying. This is a nice little pullback area here. The second macro is about to start. Because it's a pullback, it's still bullish. This is an entry, a likely area for price to return to before moving higher. It's just a really small position. We're in a macro, so if price is going to move higher, I would expect to see price move higher like very quickly. Otherwise, it's just wrong. Because it's a busy candle 1, 2, and 3. Just want to see if we can get into the next, if price will draw into the next hourly SIBI. Next hourly candle opening, so we can expect an open, if we're expecting higher prices, open, low, high, close. At this point, if I was trading with more size, I would be pyramiding out of my position. This right here is a 4.27 risk to reward, which is great. Because I'm trading a small account and I'm trying to build it as quickly as possible, I trade with a small size and I am maximizing my RR per trade. So I want a minimum of 1 to 3, and anything above that is bonus. And I don't trade to the RR, I trade to what I see on the chart. So with a smaller account size, I trade with a much smaller position size to keep any losses really, really tight, and then let these runners run. That's how I'm building my small account. Hang on a second. I'm going to answer that question in a second, Jason. So on non-farm payroll week, price can have pretty large pullbacks, wicks, like price distortion during this week. It's kind of tough to manage. So you can see that my stop loss, um, obviously I always trade with a stop loss, but I got to give it enough room because it's very easy to be taken out with a wick, with a fast movement. And this week is known for that. So you kind of have to, study that, write in your journal what you see, and just know that this is why I don't take a lot of trades on non-farm payroll week, because I just find that the price action is very wicky, very pullbacky. I want to see if we can get into the second SIBI here. Again, we're in a macro. If IPTA has a destination in mind. I don't know what it is. You don't know what it is. Nobody knows what it is. But when IPTA has a macro that it's unrolling, then when price pulls back into one of these bisis, and you miss the initial move, this is an opportunity to get into a position. Further down was the order block, but if price is really bullish, I highly doubted it was going to come down here. So you can just wait for these retracements. It's just a retracement into a major BISI. And then when the macro starts, and you want to see price leaving the macro or leaving the BISI with some strength, right? Like you don't just enter it without some, come on, you stupid thing. This is what I mean. Like this week, these pullbacks are just stupid ridiculous. A green fair value gap is a BISI. Buy side imbalance, sell side inefficiency. I'm going to explain that in a minute. I'm just going to finish this trade. The green fair value gaps, they are BISIs, and the pink fair value gaps going down are sibis. Sibi. I'm going to explain that after, because this is important to understand. So we are in a SIBI right now, right here. This pink thing is a fair value gap, but it's a SIBI. These are key ICT. Okay, this thing is just having trouble getting up a little bit higher. It's 1108. If price moves through that BISI, I'm out. Yeah, exactly. But this is what I mean. This week, this is the kind of price action that we get, and it's just mentally really draining. I just find it like mentally, it's kind of exhausting, right? We have balanced price, pretty much balanced price range through here. So I would expect price to move up. At least while we're in the macro. We only have 10 more minutes, 5 more minutes. Okay, so this just, okay, I think I'm done. I'm out. This is why I absolutely hate trading this week. Okay, so let's go back to some of these questions. No, that's not a smart money reversal yet. And again, when price is super, super bullish, you have to give a reversal time to really build some structure. Otherwise, you get lulled into thinking it's a reversal and then you get your face ripped off. So, okay, so I would want to see at a different time of the day some structure that makes sense for a smart money reversal with all the confluences in place. Okay, I just want to go back and answer. So Levere, I hope I answered why I took that because I missed the original move. So when price just pulls back into a fair value gap, with continuation in mind, that was just my area to get in. I wouldn't have gone down to here. This is an order block, and I just wasn't sure the price was going to come back down. To whoever asked me about what a sibi is and what a bisi is, and let me explain that. Let's go on to yeah, it's just these deep retracements during non-farm payroll week, and it's really, really frustrating. I hate it. That's why I don't trade very much on non-farm payroll week. Okay, so let's just talk about BISIs for a second. As price is moving up, nice price movement, moving up, it is creating fair value gaps. These are areas of inefficiency. Why it is called a buy side imbalance, sell side inefficiency is because as price is moving up, price is making higher prices very quickly, creating these inefficiencies. These, we call them fair value gaps, but to be specific, it is buy side imbalance, sell side inefficiency. And what does this mean? On the buy side, so the buyers are buying here that created this inefficiency. It creates an imbalance for the sellers. The sellers are on this side of the curve. So as the buyers are buying on this side of the curve, they're buying so quickly that price is jumping so quickly. So let's say we're buying apples here, okay? The first apple we buy is at 10 cents, then we're buying at 50 cents, then we're buying at 75 cents, then we're buying at $1. Price is being delivered so quickly on the buy side that the sellers, the people who want to sell their apples, they're not able to sell an apple for 15 cents, 20 cents, 24 cents, 27 cents, 28 cents. So on the buy side imbalance, there's an imbalance here. There's inefficiency. How does this inefficiency become a balanced price range? The sellers have to come down and reprice into this inefficiency. Therefore, they come back to this imbalance and they begin to sell their apples in shorter, tighter prices. That is price redelivering price to balance the inefficiency that was caused by the buyers buying so quickly. The whole objective of the market is to distribute price in a fair and equitable manner to both buyers and sellers. So when there is misalignment between buyers and sellers, in this case, buyers were buying so quickly that you can't get an apple at 15 cents. You're going to pay 10 cents, 50 cents, 75 cents, and $1. You can't get an apple for 27 cents. So price, the market sends price back to redistribute efficiency on the sell side. So we have the buy side over here. This is the buy side. And then price must come back and redistribute on this side. This is the sell side. We're making apples affordable to everybody at those smaller prices. When we see a balanced price range, only then is price allowed to continue its movement, whether that be up, down, or wherever. Price must rebalance before it can make a significant move. On the other side of the coin, we have sell side imbalance, buy side inefficiencies. And let's just take a look at what that really looks like. And then we got to look on the higher time frame. This is a long answer to your question, and I hope it makes sense. On the 5-minute chart, let me go up one more. I'm going to go to the 15-minute. This is one of the most important concepts to understand how order flow works. So back on February the 26th, price on the sell side, price is selling here. Price is selling their apples so quickly that it creates these inefficiencies. Because sellers are now selling apples so quickly, they're selling at $1, then they're selling at 10 cents and then 5 cents, and then they're basically giving away the apples down here. So it creates a sell side imbalance. So how does market come back to make this a balanced price range? The only way that happens is when buyers, the buy side, comes back to redistribute price into these areas of inefficiency. Buyers today, buyers have come back into this sell side imbalance to create efficiency in the market by redistributing price on the buy side. And this is how the market moves. It is imbalances to balanced price range. And once balanced price range is achieved, then we wait and we see where price wants to go next, where IPDA wants to redistribute next. So that's a very long answer to whoever just asked me about what a bisis and a sibis are. And these are fundamental concepts in understanding why price moves, where it's moving, how the buyers, how the sellers engage in price, and how they play this game. It would be like, think about driving a car with one foot on the accelerator and one foot on the brake, right? We're going forward when we're on the accelerator, and we're redistributing on the opposite side when we're braking. And so there's this beautiful balance in the market. And once you begin to understand these concepts, it's so beautiful how price moves between inefficiencies to seek out liquidity to balance and rebalance areas of price. And that's all price is doing. And so when you have these levels on your chart, it becomes much simpler to understand where price is going and and how to anticipate where price is going next. That's why I have the hourly on my chart. So that's a very long answer to a question. Okay. Jason. Question by Jason. I see market between bearish fair value gap above on the 60 and bullish fair value gap below on the 15. How to manage? This is an excellent question. Excellent question. Let me think about how to answer this. Back in the day, when I've been trading now for 4 years, but let's say back in the day, 2 years ago, I was looking at so many price levels. I would be flipping between the daily, the weekly, the 4-hour, the 1-hour, looking at the 15-minute, deciding when to get in the 5-minute. Maybe I should be on the 2-minute, on the 1-minute. I was moving between so many price levels that there was no consistency for me. And I think one of the things that really catapulted my trading forward was to look at 3 time frames. Choose 3 time frames. And the higher time frames, your higher time frame is your analysis. As a day trader, I look at the weekly and the daily as the most important. The 1-hour is my most important level. It's where all my imbalances are on my chart on the 1-hour. I don't look at the 15-minute. Okay, my 3 time frames are weekly and daily. I'll call those my higher time frame analysis. Then the hourly, and then my entry time is anywhere between 5 minutes and 1 minute. And so once I stopped looking at every time frame. So your question is, what about the 15-minute fair value gap versus the 1-hour fair value gap? That's basically your question. And my answer to that is choose your weapons. You cannot trade every single time frame on the chart because you'll drive yourself nuts. If you're a scalper, then your time frames would be, I'm guessing, 4-hour, 1-hour, and then, or maybe 1-hour, 15 minutes, and then your entry is 1 minute. But choose your three time frames and stick with those. So I wait for price to come into the 1-hour, into a 1-hour sibis or bisis. And then I move down to my entry time, which is 5 minutes to 1 minute. Now I'm on the 15-minute right now, and I'm almost never on the 15-minute. So you're going to at some point have to decide what is it you're trading? Are you going to trade off the hourly, or are you going to trade off a 15-minute? If you're trading off the 15-minute, then your entry is the 1 minute. So rather than looking at 7 time frames to try and determine where you're going to engage with the market, choose 3 main time frames. And there's your higher time frame, which could be the monthly, the weekly, and the daily. That's fine. And then your mid-range time frame, which would be basically how you're watching the market, and I'm watching on the hourly. And then your entry time could be a 5-minute, but let's say you don't see your entry on the 5-minute. You may have to go deeper. You may have to go down to the 2-minute or the 1-minute. It just depends where you're seeing uh, the entry. If I'm looking for a smart money reversal, I'm going to start on the 5-minute. If I don't see an inverted fair value gap or a fair value gap, I'm going to go down to the 2-minute. If I still don't see an inverted fair value gap or a fair value gap, I'm going to go down to the 1-minute. I'm going to keep moving down until I find my entry model and I find all the confluences that I'm looking for. So I hope that helps. As soon as I reduced, and I knew that was a big problem of mine, that I was looking at way too many time frames, such that I couldn't make a decision to save my life. I actually have a chart. I'm gonna look for it tonight for you guys. I have a chart on what the time frames are. And I have a chart. I have these charts from like a number of different really good traders, and all the charts are in sync. And so it seems to be an accepted range that traders use the 3 time frames. So I hope that really helps. And I totally understand when I was in that phase of checking all the time frames, thinking that more was better. I was so misguided in that thinking. And I think with trading, we tend to think that more is better. More is not better. Simple is better. A repeatable, simple entry model, once you have your higher time frame analysis established, the simpler the entry model, the more repeatable. Just keep it simple, right? And flipping between all those time frames and trying to analyze between a 60-minute fair value gap and a 15-minute fair value gap, there's no difference. Choose your weapon, choose your level, stick with those levels. Okay, I want to come back to Ludo. Sorry, I'm just going to call you Ludo here. You asked earlier if this was going to be a smart money reversal. You see how price is just continuing to move up? For a smart money reversal, we need to see structure being built, like real structure being built. Otherwise, you got to go with the trend. When trend is showing you that it's super bullish, as it is this morning, you continue on that path of respecting the bullishness until and unless it reaches point B, the level that IPTA wants to get to, whatever level that is. And then usually there's some chopping around, and then the smart money reversal begins to show itself. I know there are times, I get what you're saying, that there are times where price just shoots right up, and then we get a change in the state of delivery and price shoots right back down again. And yes, from time to time that happens, but more often it needs time to evolve. And we have to ask ourselves, does IPTA want to go this morning? If this is as high as it wants to go, then it's going to chatter around here for a while. We're going to see like some consolidation, right? We're going to go through lunch. We might see these little pullbacks, but we're going to continue to see some consolidation. And then we may have to wait until the afternoon when we get a manipulation higher, displacement down, return to an inverted fair value gap. Now we see a breaker, and then price begins to move down. This is how a smart money reversal shows itself. It is a process. If you jump into something thinking it's a smart money reversal when price is very bullish, you're going to get your face ripped off. And that's happened to me a million times until I finally figured out to be patient and to wait for confirmation on a smart money reversal. Okay. Citron, you're hilarious. I get you. Yeah, we all struggle with the psychology side of trading, Sean. Yeah, you can call it support, Jason. You can call it support, sure. Yeah, Sean, that's a really good point. That's a really good point about prop firms versus trading like your live account. Obviously, a live account, you have your own rules, and then you don't have to worry about drawdown or, all the rules that prop firms have. But on the other side, prop firms are, if you can play by the rules, if you have enough discipline to really adhere to those rules, then having the leverage is really nice. Yeah, so Ludo, look at the time of day, right? We had the morning macros where price is bullish and pushing up. It would be low in probability to think that price is going to suddenly do a huge reversal. Not that it can't, but the probability of that happening is less than more. And Ludo, if you want to be the first one in the move in a smart money reversal, I have two questions for you. Question one, do you have a need to be right? In other words, you're anticipating a smart money reversal and you feel it's so important to be the first one in the trade. What is the reason for that? What do you get from being the first one to call the top or the first one to call the bottom? And I get you because I've been there. I want to be the first, but that's ego, right? It's smarter, it's better, it's safer to wait for the smart money reversal to begin to show itself to us and then wait for confirmation, which could be second stage distribution. If you're trading on the 1 hour time frames and you're waiting for these fair value gaps, right? For reversals up here, the probability is that it's going to be a decent run. And if it's a decent run and it's 200 points, what difference does it make if you're first one in the trade or the second one in the trade? If you're finding through journaling that you're entering trades too soon on the reversal, then you need to change your approach and you need to, I hate to say like exercise discipline because that's easier said than done, but maybe for 30 or 60 days, you say to yourself, I'm not going to be the first one in the trade. I am going to wait for confirmation. And this is what confirmation looks like to me. And then define what that confirmation looks like. You don't have to enter on the first inverted fair value gap. You can wait for price to come up and hit another fair value gap and wait for a bearish candle coming out of that SIBI. But define what confirmation looks like to you and then practice that for 60 days. Report it in your journal and see what the results are. Yeah, 100%. 100% Gonzalez. Oh my God. Are you kidding me? I'm an athlete and I have been competitive my entire life. Being first in the move, it's such an ego rush, and it is something that, yeah, I called it, I was first in, I saw it. That's ego. that's pure ego. And I get it because I've had that. I've had to like deal with that with myself. Now, I think men are more prone to ego than women, but boy, oh boy, I hear you. I've had my face ripped off more from reversals than like anything. But now that I have this smart money reversal, I know what I'm looking for. But now I'm more dialed into what time of day is it? Uh, Waiting. Sometimes displacement is so large that you think you're missing the move. Those are the smart money reversals that I love, right? That we see this huge move down and we think to ourselves, oh my God, I missed the move. No, that's just the displacement. Then you wait for price to come back up into that fair value gap. And that's the time to consider engaging with the market with your entry model. But there was a time where I would see those big displacements and think, well, I missed the move. But no, that's like your first signal that there's a smart money reversal coming. Yeah, really good question, Sean. So Sean, I have what's it called here? I have I'm on a Mac, okay? So I'm not on a PC. On Mac it's called Keynote, but on a PC it's called PowerPoint. PowerPoint. That's what uh that's what it looks like. So I have a PowerPoint for each year, and I create like a template, and then all I do is for each slide, I just like duplicate it, and then it's ready for me to enter my new information. So something like this is what it looks like. And yes, I just take a screenshot and I drag it in. And you can see that I'm looking for very specific things. And then I have my little greens when it's profitable. And then when I do a psych uh, screenshot, when I've learned something psych, then I know that this color is psych. So this is basically what it looks like. So I'm really dialed in on psychology this year. And so I'm focused on how I'm feeling. And I tell you, I'm not a big feel person. I know that women are known for like being more emotional, but I am not an emotional person. So I really am working on how am I feeling when I enter this trade? Is my position size such that I'm not feeling fear? Um, as the trade is unfolding, I'm checking in with myself. Is my heart racing? Do I have sweaty palms? How do I feel about the trade? Am I accepting the fact that this is one trade in 1,000? Um, am I able to, with no emotion, am I able to read price in order to stay in the trade to its logical conclusion? How do I feel on the pullbacks? Am I nervous? If I'm nervous, why am I nervous? Am I nervous because I don't trust my initial assessment? Or am I nervous because I might lose out on that potential profit? If I'm feeling those nerves, then do I have the confidence in the trade in the first place? Was that an A plus setup? Because if it's an A plus setup trade, I should feel neutral. I should feel nothing because it's one trade. It's either going to work or it's not going to work. And so these are the things that I'm checking my feelings and thoughts as I'm going through my trade. If I get into a trade and I immediately have regret, what does that mean to me? What will that mean for the next trade? Does it mean that I had all my check boxes checked that this was an A plus setup? Or was I being impulsive? And if I took an impulsive trade, should I have? Because if I immediately get into a trade and feel like, oh, damn, I shouldn't have gone into this, well, that's a problem. And that is me being impulsive. So I've been doing a lot of like emotional check-in. Um, and this year, I feel like I'm moving forward with a neutrality. So no fear, no excitement. After I have a good trade, how do I feel? I feel just fine. If you asked me tomorrow what the trade was, I'd have trouble remembering it. I want to trade with that type of neutrality, and I've had to work really, really hard to get here. And I have to work with a small position size to be able to achieve that. When I start increasing in position size, I notice that my emotions begin to change. So let's say I start trading with 3 contracts or 5 contracts. My emotional and psychological state immediately changes. Like there's fear, there's stress, I might be sweating a little bit. So I am trying to diffuse my emotions by slowly and over time building confidence in my trades and then scaling up. And it's a process, right? Like it's a huge process. That's my journaling process. It's a PowerPoint. And I find you can just take a quick snapshot of your screen or your trade and just like stick it in there. I think I have in 2025, my PowerPoint from 2025, I think I have more than 600 slides. Like it's really nice to kind of go back and take a look at how far you've come emotionally and as well as with your trades. See how this trade is continued bullish? This is what this week does. The the pullbacks, the retracing of price, like this is what you get on non-farm payroll, and I hate it. I really, really do. I saw your video catching the Asia short. I was in 2 and got stopped at break even with 2 ticks and market, yeah, 450 points. So Ludo, that was on Monday night, right? The Asia short. You should go back to that trade with fresh eyes, look at it with fresh eyes, and look at where you put your stop loss. Look at what your position size was. What would you need to have stayed in that position? Because for Asia and London, price moves much more slowly and can retrace. And so you have to have a stop that is a little more generous than what we would normally have in the New York session. So Ludo, you should go back to that trade and with fresh eyes look at it and ask yourself, what would I have needed to have stayed in this trade? And it's likely your position size. Because if you trade with something that's so small, so insignificant, you can have a wider stop loss and allow for that trade to play out. Yeah, the journaling, oh my God. Journaling is, again, girls, women, we've had diaries as little girls our entire lives. Every woman, every girl journals. Like, oh my God, literally. And I don't think there's one man on earth that was given a diary as a child with a mother who said, here, journal your emotions. Like, it probably would have been a good thing, but it's not known as a guy thing. And I think that's another thing that men feel that, for one thing, men are taught not to tap into their emotions. So as soon as you get into trading and someone says to you, trading's very, high-end psychology and highly emotional, you need to tap into your emotions. A lot of men are like, look, I haven't tapped into my emotions in 40 years. What does that even mean? And so I've spent some time thinking about this, how abstract that must be for a man to tap into his emotions or even discuss with anyone in his life that he's journaling his trading emotions. Like, I'm sure over a couple of beers, you get laughed out of the bar, right? But women, we're always wanting to talk about our emotions, right? If you're dating a girl, what does she want to do on a Friday night? She wants to tell you how she feels. She wants to tell you how her week was feeling to her, how it feels for her to make a decision. Like girls want to talk to men about how they feel, and men just want a woman to jump to the problem so that the man can help solve it. And if you think about that in terms of trading, a man takes a trade and takes a loss. He immediately wants to fix the problem. What is the problem? The problem is that I took a loss, right? That's the problem. So a man wants to jump in and fix the problem. And so he's going to jump in with another trade and overtrade or go into, complete spin cycle. A woman takes a loss and immediately wants to examine, how do I feel about that? Like, how do I feel about that loss? Do I feel like I failed? Do I feel like I'm going to be a successful trader or not? Now I want to call my girlfriends and I want to talk about how I feel. So it's difficult for men to just for the first time in their lives ever to think about journaling, because you probably sit in front of this blank screen and you're trying to figure out your emotions on this trade. And it's hard, but make sure you have a password protected on your journal so that nobody can read it, right? You don't have to share that with anybody. It's very personal. It's for you. But when you go back and you look at your emotions, how were you feeling when you came to the market this morning? You know, were you still thinking of work from yesterday? Did you have a fight with your girlfriend? Do you have a problem that you're trying to resolve that has affected your emotions when you sat down to trade this morning? And what can you do to come to the trading day or the trading session and have that equilibrium in good place? And our feelings of anger, greed, missing out, fight with the girlfriend, all of those things affect our trading. And when you can start to put names to those emotions, then you can start rewiring your brain. So, not just a feeling of disappointment. I can say I'm feeling disappointed, but then you have to drill down and say, what is disappointment? For me, disappointment was I misread manipulation this morning. I failed to see where the manipulation was. I need in future, I will take a little bit more time before entering that trade and ensuring that I am not projecting what I want the market to do versus what it is showing me to do. That would be my entry journal for this morning. How do I feel about that? I'm neutral. I'm not angry. I didn't feel like I missed out. I'm neutral because I'm trading with a very small size and I'm allowing myself to focus on being a technical trader and improving my technical acuity versus focusing on money, making profit, feeling disappointed that I had a loss. How much was that loss? I don't focus on that, but I'm trading with a very small size that gives me permission to not focus on that. Sean, right? I'm going to send you a little pink diary with a little key and lock. That's what all girls had by the time we were 6 years old. We all had a diary. I am a girl. I'm a total girl. Okay, Jason, another question. What does the fact that we are above? Okay, so we've already covered that. Donald, vomiting. Okay. Okay, guys, well, that's like I went way over here on time, but sometimes I think these conversations, these discussions are so important because there's a lot more to trading than just to open up your chart and take a look at the market. I think that having an entry model is the easiest thing. Like, just freaking pick one entry model. And that's like the easiest thing about trading. What makes trading challenging is knowing when to decide to enter into a position, and that comes with knowledge of higher time frame, lower time frame, and the environment that we're trading in. And what I mean by environment is, what week is it? What day is it? What session is it? Is this the session that I normally trade, or am I opening a session I've never traded before? Becoming an expert in a session with one entry model and then working on your higher time frame analysis, and on top of that, having a risk to reward plan that you're going to stick with 100%, like 2000%. Your RR is everything. And so sometimes you can look at a trade and you can say, this meets my higher time frame analysis. I'm now down on the 5 minute. I see that there's a possible entry, but the RR doesn't work for your trading system. The RR is too large. Even if you went down to the smallest position size, your risk on that trade is too high. Do you have the discipline enough to say, this is not my trade? And it may go right to terminus, but the reality is you have to stick with your RR or you're never going to become profitable. And sticking with your RR keeps you in the game long enough to be able to learn how to trade and become a great trader. And I don't give a rat's behind on what other traders are doing around me. I don't care about the social media. I don't care about the Lamborghinis. I don't care about the $50,000 weekends in Miami. What I do know is if I take my time and I focus on putting together a trading system that works from the RR position, from my psychology position, from my money position, and I just focus on watching and anticipating my trade that works with my RR, that over time I'm going to get there. Like, there's not a doubt in my mind. And that's the only thing that I'm focused on. I'm not focused on what everybody around me is doing. I couldn't care less. And journaling is really, it's critical, because on those days that you think you are failing, on those days that you doubt yourself, on those days that you feel like you were the only one who didn't make money today and the market moved 1,000 points, it's on those days that you go back in your journal and you flip through and you see how far you've come in a year. Because if you constantly define yourself against other people, and other people are only showing you what they want to show you. Okay. But if you're constantly, and men do this all the time, you guys do this since the day you're born, you're constantly comparing yourself to other people. You know, when you hit the age of 30, have I achieved what I should have achieved? Have I achieved what my friends have achieved? Do I feel like I'm behind in life? Do I feel like I'm ahead in life? Maybe I'm not married. Maybe I haven't met my soulmate. Am I behind? Like, you're constantly comparing yourself to other people. And in trading, you have to let go of that, because that is a really dangerous, dangerous, dangerous place to be. And that's all I'm going to say on that, is that defining yourself against other people is the fastest way to unhappiness and feeling like a failure. And there are many days that I have felt like a complete failure at trading. And, you know, when you go back in your journal, and when I go back 2 years in my journal and I see that my trades are 25 points, 20 points, and I was ecstatic then. I was just like, oh my God, like, I'm killing it. I had a 20-point trade. That's like compared to when I started ICT, where the goal was 7 to 10 points, right? That would be like amazing. And now, I'm so happy with 100 points, 200 points, 150 points. That's the new norm. But if you're not journaling where you came from, it's very easy to get down on yourself and thinking that I'm not in trading where I should be if I'm comparing myself against, TJR or Scarface or any other 18-year-old who's making 200,000 a month. Let go of that, because that's not helping you. Focus on developing your system, your trading system, and waiting for those A+ setups. And if I get my A+ setup 3 times in a week and I have a nice 100, 200 point run, that's awesome. And I celebrate that. But let go of what everybody else in the space is doing, because that is the fastest way to discontentment. And there's nothing worse than feeling like a failure when, in actual fact, if you're a trader, you're in the top 5% of the world. You're already way up here. Because most people don't trade, most people don't stick with it, right? Because it's hard. It's literally the hardest thing I've done, and I've done some pretty hard things, but this has been bloody difficult. Like really difficult. And no one in your circle of friends, no one is going to understand how difficult this is if they're not a trader. And I think that's why these communities are so important, because there is no one in your life, like literally no one, who can understand how difficult trading is unless you've been a trader for a while. As honestly, this is the hardest thing I've friggin' done in my life. But I'm gonna get there, and I feel really good so far, and I'm so happy that I have my entry model and starting to feel really good about understanding macroeconomics in addition to microeconomics, and letting go of comparing myself against everybody else. I don't care. I don't care what anybody else does. You do you. I do this full time, Russell. Yeah, I do this full time. Okay, guys, well, that's it. Welcome to non-farm payroll uh stupid week. Tomorrow is what is tomorrow here? March 5th. Unemployment claims. Let's just do a refresh here. So I'm gonna be back tomorrow for a very soft tape read. There is no trading for me on Friday, like none. I would never trade non-farm payroll day, like never. It's never going to happen. This is like a day from hell. And so tomorrow is the day before non-farm payroll, so I'm just going to do a soft tape read, like really, really soft. But I don't want to engage in a market that is moving so erratically, because it drives me crazy. How important is my macro in trading, Ludo? It's number one. Time comes first. Time is always going to come first. And if you watch the macros and you see that between the macros, the price distortion, go back in your charts and take a look what price does between the macros. It can be really frustrating. But for me, time is first. Why you did first trade? What was my first trade? Oh, yeah. So that's a good question. Levere, that was me having these ICT thoughts on the Venom model. And this is still remains my problem with having studied everything in ICT, over studying ICT, is coming to the chart and seeing all the different models. And so I think that I saw the Venom model. So price moves up and then moves down, and then taking into consideration the opening range gap from settlement price from yesterday to today's opening, and seeing that the probability of price moving down first was around 70%. That is an error of mine. And if I hadn't had that in my mind, I would have been more likely to have seen the true manipulation this morning, which was here. And I have just shared with you what's going in my journal today. And so getting caught up in the noise versus staying with my model 100%. And this has been a hard thing for me because I think I just overstudied ICT. Now I just see all these models on the chart. And when you're trying to trade everything, you're going to trade nothing. Just looking here, we might have reached the high of the day at 25,169. We may have. Anyway, okay, guys. Yeah, well, there's no Lambo on here, Russell. Like, you'll be the first to know. There's going to be a car, I hope in 2026, but it's not going to be a Lambo. It's not even going to be close. Anyway, guys, it's always fun, and try not to take it all too seriously. And if you don't have a journal, go and start one today. Just open up a PowerPoint and use the slides, and they're easy to read, easy to print on, easy to throw a screenshot on. And that's it. So have an awesome rest of the day. I'll be back tomorrow, and we'll see what the market wants to show us tomorrow. All right, guys, take care. Oh, don't forget to like, share, and subscribe. Please help a girl out. Okay, I'll see you tomorrow. Bye for now.